There are limitations though, and I think your earlier point around which crypto assets are the most popular, if you look at the ETNs, they're generally around BTC only, Bitcoin only. But the reality is we're seeing demand for other type of currencies. So Bitcoin and ETH are probably 80% or 90% of what I would say institutional investors tend to go for. And that's your entry point. But I can guarantee that other cryptos such as Cardano, Solana, Polkadot, and the likes, exposure is much faster through, I would say, direct purchase of these crypto than through structured products that are relatively expensive to run, expensive to create, and again, follow the regulation. That's not always being sort of rolled out or implemented as fast as the demand is.
No, that's great, Max. And Paul, just given Deutsche's significant global reach and very strong institutional client base, I mean, what are you seeing in this space? I mean, what are your clients looking for? Are they giving indications of how they would like to get exposure to these assets? And obviously, we've kind of primarily talked about crypto so far, but are you seeing interest in potentially broader products like security tokens and such like? What's your perspective?
So, I mean, we have a very broad stakeholder community for this topic, right? And I'm sure that's not different to any of the other large banks as well, of course, including SCB. But we see demand from every single client sector. Both obviously institutions, including hedge funds and market makers, who may want to quote the underlying products as well as hold them. We see that through the type of clients that want to buy the products that Max was referring to earlier, be that through structures like ETFs and ETNs, which obviously give you that kind of wrapper that you can hold in a conventional structure with just providing Delta One exposure to the underlying. Clients who actually, of course, want to trade the futures, which are now relatively liquid on the CME, or they actually want to be able to trade a non-deliverable forward, maybe using the futures as a hedge, and that includes obviously our wealth management clients and our asset management division. So the demand is everywhere. It's genuinely consistent. The products that obviously the firm wants to provide depends on the buying segment of the clients, and that will be appropriate and suitable in each case. But the level of interest and the level of demand from every single client sector is really, really strong. So I think, as Max said actually at the beginning of the segment, this isn't going away. I'm actually surprised it's taken as long as it has. I mean, my first, kind of foray, I didn't even think I was a particularly, early adopter, but my first foray in looking into this topic, through my profession was 8 years ago. But it really, now kind of like, the end of 2020, signaled a really big change, I think, in the investor interest in crypto assets overall. And now the financial markets are adapting to meet that demand.
No, that's great. And I guess when you consider the crypto market is now in the order of 2.7 trillion from a scale point of view, obviously there's been significant progress with some volatility, as Max, you described at the outset.